Is April 6th, 2021, and I want to start recording more videos. This is my first one. I'm excited to share with you some of my thoughts on the current state of Nifty Gateway and just how I'm approaching the platform and some of my strategies. So in this video, I'll cover um, my opinion on the current state of Nifty Gateway, how I'm looking at it, um, a formula that I'm currently playing around with that I think you all would like to hear more about, and a useful comparison method that I've been doing a lot to try to understand how to value art and how to compare one piece of art to the other. And on a similar note, some important theoretical questions to ask about specific art pieces and Nifty Gateway in general. I'm also going to explain why my portfolio is smaller than it used to be. That doesn't mean I'm necessarily bearish on the platform. And my number one kind of strategic thought process on how to approach Nifty Gateway, which is this concept of new art replacing old art. We'll talk about that later. And then my 2 to 3 favorite plays on Nifty Gateway with high upside that are affordable / under 5K. So I'm gonna do these a little bit out of order. So first and foremost, why is my portfolio smaller than it used to be? Multiple people have asked me about it. So this shows that I have 14 NFTs. I actually have 15. I have a Lotus train in one of my wallets, and I also manage another account where I have a lot more work. I got like 6 or 8 Mad Dog Jones pieces and a bunch of other pieces, and I get 50% of the profits from that. But that's not related to this. For my own personal account, I sold pretty heavily over the past few weeks. And the reason why I wanted to do it, long story short, was I invested about 60 grand into the platform in early to mid-February. And I ran up to an account balance of around $150,000 in value. And for me, in order to be able to play Nifty Gateway on a longer than a few week horizon, for me to be able to play on a 3 month, 6 month, even a few year horizon, I really felt that I had to get my principal back off of the platform. So I was just playing with house money, and that was going to make me a lot less concerned about whether it all goes to zero. Because right now, if everything goes to zero, I lose $0. I don't make anything for a lot of work over a couple of months, but at least I don't lose anything. So I have, 2 Lotus trains that's worth about 60 grand right now. I have a Deja Vu worth about 15 grand right now. I think it's, actually should be worth 20, but so I got about 75 grand in Mag Dog Jones. And I mean, these Satoshis went to absolute crap, but I have some account balance. And so basically my total portfolio now is worth around 90 grand. So now I'm looking forward to being able to run up my portfolio and run it to 200 grand if I can, or something like that. But worst case scenario, if this whole thing crashes and burns, I'll probably still be able to get out with 40 grand. Definitely not going to get out losing any money. So that's why I've sold a lot of my pieces and consolidated most of my account value behind Mad Dog Jones, and now I have some house money to play with as well to make new acquisitions. So that covers that question. And then I actually didn't fit this into a slide, so I'm just going to talk about this now. But or actually, I'll talk about that after we go through my opinion on the state of Nifty Gateway. So for anyone that's been on the platform over the past, three weeks, it's been a very brutal bear market for NFTs in general, but also on Nifty Gateway for the past 3 weeks. I've seen at least one other bear market, maybe 2, but late February was a pretty bad bear market on Nifty Gateway, but this is definitely considerably worse. And I think it definitely spooked a lot of people. And then there's also this backdrop of NBA Top Shot taking a big hit as well. So people are definitely concerned and worried about all of their art going to zero, et cetera, et cetera. I mean, one thing I would say is that in any speculative market, especially highly speculative ones. So if we're talking about like altcoins and crypto, or if we're talking about, growth tech stocks on the stock market, all of these things, are going to be very similar in terms of price action. You're going to have big run up in prices. You're going to have huge drawdowns even if something's good. I mean, if you look at on the stock market, if you look at a lot of growth tech, if you look at Peloton or Palantir or Unity or a lot of these growth tech stocks out there, some of them have retraced, over 50%. Um, and that doesn't mean that they're bad. It just means that that's how highly speculative things work. There's lots of price action like up and down. I'm actually less bearish than I was on Nifty Gateway like a week or so ago. I think I'm starting to see some stability in the pricing in the system, and I'm starting to see a similar turnaround to what happened in late February. Um, so a few things. Some of the really blue chip pieces or top tier pieces retain their value relatively well. Now that doesn't mean that they didn't drop, but a lot of them dropped by 30% instead of 50% or 75%. um, one thing I think that was very painful and recognizable about this latest sell-off is that old art that's no longer relevant in today's ecosystem took an absolutely massive beating. I took some really big losses on some old art that just really doesn't fit into just how quickly the platform has evolved, and we'll discuss that more lately or later. I also think that the botters and people trying to do these like 24-hour flips, they've been really getting wrecked lately, and I think that a lot of them have left the ecosystem, and there may be some stragglers, but overall it seems like we're getting less and less of that, and I think that that's good for the market. Yesterday, Mondays and Tuesdays are usually really slow. I'm seeing some pretty good buying demand for Mondays and Tuesdays. Um, and based on what happened in the last bear market, what was interesting was that the lower price items, they started to stabilize and rebound first. And then the higher price items actually continued to fade a few more days. And then they recover after. And I'm seeing, similar things where certain like 1K to 2K pieces, they have seemed to have bottomed out and have found a floor, and now we're seeing some pullback in some more of the blue chip pieces. Now some of the blue chip stuff has already started to fade, but like if you look at Pack today is like down selling at like 12K. That was up in like the 16 to 18K range. Even Deja Vu, one of my favorite pieces, it just sold for like 14K. It sold for like 19K like 2 or 3 days ago. So we're seeing those, mid or like blue chip higher tier items, they're starting to pull back now. So that may be scary for people, but based on what happened in February, so if you look at February, I think like March 1st, Deja Vu peaked at like 15, 16K. And then it continued to pull back and went all the way down to like 10K by like March 10th, I want to say. And I bought back in there. I got another piece there or two. Um, and the rest of the market, the mid-tier stuff had already started recovering by March 10th and was on the way up. So seeing similar price action to what we saw at the end of the last bear market, where the blue chips start to fade, and then the smaller pieces, start to stabilize, or at least or rally. Um, so that's why I think that the bottom is in right now on Nifty Gateway, but the environment has permanently changed. And I'll go into more details, but essentially, people are going to have to be way more selective and way more critical of what they buy going forward. And we're going to see a lot more concentration of price action with great pieces, and we're going to see a lot more mediocre pieces just slowly descend to zero. And in looking ahead, I think that we have a lot of positive catalysts on the horizon. So we have Pack just released that he's, in addition to the Sotheby's auction, he's doing a collab with Nifty Gateway and them. So that's going to be huge, bring a lot of action. Mad Dog Jones has a big auctions coming up in Phillips. I think that's going to be absolutely massive. I think it's going to attract a lot of whales, and I think it's going to attract a lot of press. And I think that those are both going to be very good for Mad Dog Jones pieces. And of course, when someone comes on the platform to buy, they're going to buy some other things too. And I also think that there's a lot of great artist drops coming in April. That's going to bring new money in. With a lot cooler stuff, at least I think, than we saw at the end of March. So that's my feeling on the current state of Nifty Gateway. I'll quickly cover this new formula that I'm trying to use to find successful pieces. So I used to talk about that all I cared about back in late February was secondary volume. So if there was a lot of buying and a lot of selling on a piece, for me, that was a massively bullish indicator because it just meant that the floor was going to be able to get bought up quicker, paper hands were going to be able to get absorbed quicker, all of these things. But that has sort of changed because of the influx of flippers that came in March. And flippers do a lot of secondary volume, but that they also can hurt the long-term price action of a piece since they're doing so much flipping. And I don't have anything against flipping. I'm just telling it like it is. So what I've started to look at is secondary volume, but then also looking at the percent of the holders that have like 25 or more NFTs. So like, take a look at Afterburn. This has good secondary volume. It's been around for like 2 weeks and it's, sold through 270 out of 870. So that's pretty good secondary volume. But then what I like to do is I like to click and look at owners. So that's one NFT, right? And I'm sure there's an automated way to do this a lot better. This guy only has like 14 NFTs. But if you continue to go through one NFT, 4 NFTs, I think this is a good exercise to try to identify who is buying this work and whether this kind of stuff can hold up in a bear market, or if you're going to have a lot of paper hands or a lot of flippers. So this would be an example of someone that I would consider more of a relative whale. So you can see that they have over 43 pieces. Okay, they have 2 Salvators, so that makes me feel bullish on Salvators. They have 2 Afterburns, they have 2 Karmas. They have 7 faces. And I think this is, if you did this exercise, you would have probably seen the value in Bitcoin Angels a lot earlier than other people did. And so this is an exercise that I haven't come up with an automated process, but I think it's a good exercise to figure out, so this person has 23 NFTs. That's pretty good. But if you see an item and you can't find any whale that's holding, so this guy mini, but has 3 Afterburns. I don't know if that's necessarily a good thing or a bad thing, but this is an exercise that I have been doing when I look at buying new pieces. Is I like to go through and I like to see what the holders of the piece look like. And if the average holder looks pretty good, I may be more inclined to buy, but I'm also looking at secondary volume as well. So we'll end on good old Phil, taking a while to load. So Phil has a lot of pieces, 183 pieces. He's got 2 Afterburns, 4. He's got 3 Afterburns, some Karmas. And the more that you see of that, I think the better that you can feel about a piece. All right, so now that we covered that, and I already covered, why my portfolio is smaller than it be, we can jump into the rest of the slides. So this is a thought exercise that I've been doing a lot of lately that I think is a massive way to value pieces on Nifty Gateway. Because what's happening on Nifty Gateway right now is that there's so much art already existing and there's so much new art coming in all the time that you have to be able to think about how a piece is priced relative to how all of the other pieces are priced. You can't just look at an individual piece and be like, oh, hey, that's undervalued. If I buy it at 2K, it could go up to 5K. Well, if you look at that in a vacuum, yeah, maybe it could go up to 5K, but you have to look at, okay, what are the other pieces at 5K? What are the other pieces at 10K? Would someone really pay 5K for this piece if they could spend 5K and get a different piece? So this exercise that I've been doing a lot of lately is the would I rather. And it's great for comparing smaller items against bigger items, right? So the last sold price for the Mad Dog Jones cat was 8.4K, right? If you look at newborns right now, this is what the floor looks like: 2.8K, 3.8, and 3.8, right? So like in a vacuum, I may be like, oh, hey, newborn is 2.8K and the next floor is 3.8K and there's seems to be some good buying. Like maybe I'm interested in a newborn. I mean, me personally, I'm not touching anything Grimes, but just using this as a thought exercise. So in a vacuum, I may think, hey, 2.8K is maybe a good deal. But what you really have to be doing is comparing that value to, what you could get for 3 of those versus something else. So would I rather 2.5 newborns in my portfolio, or would I rather 1 Mad Dog Jones cat? For me, that's a no-brainer. I would always want 1 Mad Dog Jones cat. So therefore, I don't think that newborns are actually valued at a good price here. And so even though in a vacuum I may have liked the 2.8K piece, when I'm comparing it to other art pieces out there, it becomes pretty evident to me that the price action for newborns, or the pricing rather for newborns, is too high. So let's do that same exercise, um, and compare Afterburns, which I'm really liking right now, compared to 1 Mad Dog Jones. So I could buy 1 Mad Dog Jones cat, and I love Mad Dog Jones. So this is not supposed to say that Mad Dog Jones is not fairly valued, but instead of getting 1 Mad Dog Jones cat, I could get 5 Afterburns. Now I would definitely not want 2.5 newborns, but I could get 5 Afterburns for the price of 1 cat. And if I take the thought exercise one step further, do I think Afterburns could get to 3K faster than I think that cats could get to 16K? Because that's a double for both, right? Or let's call it 3.5K. So do I think that it's possible for Afterburns to get 3.5K faster than Mad Dog Jones cat could get to 16K? Because in both of those, the value of my investment doubles. I start to lean towards Afterburns here probably, because I like Afterburns. I like the price action. I like the volume. I think Xcopy is an artist that's up there. One of his works sold for a lot of money recently. So for me, I'm like, okay, maybe in this case, I'm starting to lean a little bit towards Afterburns, especially when I'm trying to appreciate the value of my work. And then just to put a nail in the coffin, I could get 2 Afterburns probably for the price of 1 newborn. Would I rather 2 Afterburns? 110% of the time. So at the very least, this thought exercise tells me I do not want a newborn at this price, no matter what it's stacked up against. I'd rather 2 Afterburns than 1 newborn. I'd rather 1 Mad Dog Jones cat rather than 2.5 newborns. Where this thought exercise can get a little bit more complex is if you're trying to compare similarly priced work. Because then it becomes, I think, a lot more subjective, and you have to do other market research out there. So would I rather buy an extrusion or a deja vu for 14K? I think that's very preferential. This exercise doesn't make it very clear for us which one we would prefer. In moving along this thought process, something that everyone has to consider more and more and more going into the future is, how does a specific piece fit into the ecosystem of art on Nifty Gateway? There's only so many pieces of art that can be worth 5K on Nifty Gateway. There's only so many pieces that can be worth 10K. There's even less that can be worth 25K. There's even less that can be worth 100K, right? You can do that all the way down to, there's only so many that can be worth 1K. There's only so many that can be worth 2K. And every week we have new art coming in and diluting the platform. So you have to continually be thinking about the art that you're interested in, or the art that you own, and how is it fitting into the overall ecosystem, right? So I said I like Afterburns, right? But I can't just be like, I like Afterburns. I have to think about, how does Afterburn fit into the overall ecosystem, right? When I could buy an Afterburn for $1,500, I could get a Victor and Victoria by Ferocious for 3K. You know what I mean? So in order for Afterburn to get to 3K, people would have to value that higher or equally to a Victor and Victoria by Ferocious. Can it do that? I personally think that as a buyer, I would always probably buy the Victor and Victoria over the Afterburn. So the only way that Afterburn can get to 3K or 3.5K is probably if Victor and Victoria moves up to 5K plus. Then there's room in the ecosystem for Afterburn to sit at 3 and 3.5K. Bitcoin Angels, they're sitting in the 3K range. Would I rather a Bitcoin Angel? Would I rather a Victor and Victoria, right? But that's how you need to stack things up, because then if you think about like a newborn for 2.8K, who the heck is going to want to buy a newborn for 2.8K if they can almost get a Victor and Victoria from a top tier artist, or they can almost get a Bitcoin Angel from Trevor Jones, right? Or they can, get 2 Afterburns. And then we got to think about these 3 pieces of work and how they can grow in price, right? So these are, you know, higher tier works that sit in the 10 to 20K range. So for any of these three pieces to break 10 to 20K, they have to be a better perceived value buy than one of these three pieces, or these three pieces have to move further up the value chain. They have to go above 20K in order for there to be room for more work in the 10 to 20K range. So this is something that I've been training myself to do a lot more of lately, which is how does a specific piece fit into the ecosystem of the greater works out there, right? And we can do this thought exercise again. Me personally, these are 6 pieces of art that I would love to buy at a great value any day of the week, right? So I consider this is not all inclusive, but this is a snapshot of like the existing body of great NFTs on Nifty Gateway. So now when I lay out whether I want to buy a new drop or whether I want to buy an old drop, I need to weigh it against what I consider the existing body of great NFTs. So like, let's say, I don't know what the price for Squirtle is right now. It just dropped, but like, let's say the price of Squirtle is like $1,500. Like, do I objectively think that 2 Squirtles is better than 1 Victor and Victoria? Or is 1 Squirtle, if it's worth $1,500, better than 1 Afterburn? Like, how does this fit over into the ecosystem over here? I don't think it does. I don't think it does, so I'm not going to buy it. Because, yeah, when I have FOMO hype and I'm just looking at the art in a vacuum, I can be like, oh, this is a cool piece of art. Yeah, sure. I could buy this for $1,500 and it'll go up to 3K or it'll go up to 5K. But is it really going to go up to 3K? Is it really going to go up to 3K and be worth 1 Victor and Victoria? You know, probably not, right? You can use this same exercise to look at old bodies of work. And I'm not hating on Crystal Pops. I made a lot of money on Crystal Pops. They were the first thing that I collected when I started on the platform. I was collecting these when Bitcoin or when Lotus trains were like 2K. If I had just not bought any Crystal Pops and I had just bought 5 Lotus trains, I'd be a very rich man today. But now I decided I wanted to collect these little things so I thought they were cool. And I wasn't thinking about making a ton of money. I was buying art because I liked it in the beginning. But one thing that is objectively true is that Crystal Pops have massively declined in desirability and value as more and more and more art has come into the ecosystem. So you not only have to do this exercise with your new drops, you have to do that exercise with your old drops and whether they're in your collection or whether you want to buy one. So once again, like this Crystal Pop, man, it was really cool in February when there wasn't a lot of other art out there, but now there's a ton of art out there. Am I really going to buy a Crystal Pop for 500? Or I mean, like at one point in time, they were going for $1,000. You know, am I going to buy one of those for $1,000 if I can get if you know for 3 of them I could have a Victor and Victoria? I'm getting the Victor and Victoria, and that's why these prices have declined and they're like down to the $500 range when these things literally used to trade for 1,000. I bought them at like 300. It was a great flip. So it's important to look at pieces of art not in a vacuum. You have to look at them in the overall ecosystem and how do they fit into the equation. You cannot tell yourself that a certain piece of art can go up and be worth $5,000 unless you objectively think that it can beat out the other $5,000 pieces of work that exists on Nifty Gateway. And then, you know, this I won't touch on as much, but we also need to consider how does Nifty Gateway fit as a platform into the overall ecosystem. And this is one of the things that we have to consider with Nifty Gateway and we have to consider with NFTs in general. It's a massive ecosystem. People's attention are going to get drawn all over the place. Now, that doesn't mean that they're never going to come back. I think that people are going to come back to Nifty Gateway, but, you know, 2 months ago, that's what everyone was talking about. Nifty Gateway, Nifty Gateway, Nifty Gateway. You know, now there's some, you know, whales on Super Rare, and there's things you can do on OpenSea, and now there's a lot of attention on Sandbox Land and Axie Infinity and Decentraland. So, like me personally, 2 or 3 weeks ago, you know, when the bear market started on Nifty Gateway, I was spending all of my time buying land on the sandbox and was having a blast doing it. And it was this shiny new toy and it consumed a lot of my NFT energy. And I really didn't do much on Nifty Gateway other than selling art to get my principal back. And I was just addicted to buying and collecting stuff on the sandbox. Well, now I'm kind of burnt out on the sandbox and I've built my portfolio there. I have about 25 grand worth of stuff over on the sandbox. And now like that novelty newness has worn off, you know? So what we have to realize is that in late February, early March, a lot of people were feeling that novelty newness about Nifty Gateway, and that's gone away. And whales or newbies, whatever, they may have shifted their attention to some other cool, shiny toys. But the question is, like, will they come back to Nifty Gateway? I personally think yes. I personally think that NFT art, just like Sandbox Land, is going to always be a part of a big collector's NFT speculation. And so I think that we're going to have a sector rotation back to Nifty Gateway, but we have to be cognizant that there's going to be sector rotations away from Nifty Gateway and art in general and go to different areas of NFTs, and then it will come back here. So you have to kind of weigh that in as well, and that could help you decide, like, when is it a good time to buy a Nifty Gateway? It's probably a good time value-wise to buy a Nifty Gateway when everyone's looking at other things and everyone thinks that you can't make money on Nifty Gateway. Just like the stock market. When was the best time to buy in the stock market last year? It was when the world was on fire, the stock market was down 30%, everyone was panicking. That was the time to buy. The time to buy the stock market was not December of last year when it peaked and everyone felt super bullish on it, right? Same thing with Nifty Gateway. You probably want to be investing a lot of money when people are thinking that the platform is dead or they're feeling super bearish, and you probably should be selling a lot of your stuff when people are super, super bullish. So let's go back to the document and see what else I want to cover. So yeah, so this is something that I really want to talk about, which is that if you think about it, and this builds upon the previous thought process, which is there's this whole ecosystem of existing art, right? Every new art piece has the potential to dilute or replace or devalue an old art piece. You can look at this within a specific artist, but you can also look at it on just Nifty Gateway or just art in general, right? So you got to think over the next 6 months, there's going to be so much new art that's going to come on the platform. Any of that art that is better than old art is going to devalue that old art, right? So when you look on a year-long horizon or whatever your investing horizon is, you need to think there's going to be a ton of new art that comes in the ecosystem. Can my art in my portfolio now stand the test of time, right? If you have a ton of crystal pops, you know, you're already feeling the pain. 6 months from now, are new people coming on Nifty Gateway and buying crystal pops, right? No. 6 months from now, are people coming on Nifty Gateway and maybe buying a Mad Dog Jones cat? I say yes, right? So I feel way more confident about a Mad Dog Jones cat. I feel way more confident about a pack piece. You know, I feel way more confident betting on a new emerging, maybe top tier artist like Xcopy or betting on Ferocious than I do betting on some nobody. And not saying, you know, Goldweird is a big part of the system. But I'm not talking about him. I'm talking about like some new person that just joins the platform. Like, do I really want to bet on them? And that's the flip side of this thought process, is that new art dilutes old art, but as the ecosystem of art grows, it also becomes exponentially harder for that new art to break through. So it works both ways, right? So as the work of existing NFTs out there continues to grow and grow and grow every month, every day, every week, it becomes exponentially harder for a new artist to break through. So the cold hard truth of that thought process is that over time, you should be exponentially less willing to buy any new drop on Nifty Gateway. Nifty Gateway is not going to like to hear that. And I'm not saying don't buy anything, but I'm saying that over a time horizon, you should be buying less and less and less primary, and you should be buying more secondary. But exponentially over time, you should be reevaluating how your pieces hold up in the secondary market as that ecosystem continues to grow, and you need to trim the stuff that's not going to stand the test of time. So that is how I'm looking at the ecosystem. 1 month ago, I would just buy opens, you know, that I like the art. So other people are going to like the art and they'll buy it, and it's going to go up in a couple of weeks. And a lot of that worked, and you know, recently a lot of that thought process has gotten me hosed. And so I've completely changed it. And now I look and I say, like, how does this art piece, you know, stand the test of time? So if you look at, you know, my existing collection right now, you know, first of all, I got absolutely hosed on these Satoshis, absolutely demolished. There's no way around it. My average cost is like $1,600. This guy Helter Skelter just dumped a bunch at like $700. Part of the issues is just a black box on the activity feed, so that sure doesn't help people wanting to buy. But you know, I pretty much written these off just as like a long-term hold. But like, for example, like I really liked the fail stuff. I just thought it was like cool. You know, it was like fun, but this was like the last like straw of me just like buying stuff that I thought was cool or I thought it was fun because like here's the thing for like, you know, $600 for $590, like does this stand the test of time, right? Like is someone going to buy this more than any other art piece at that price point? Like what's making this a differentiator, right? Like really probably nothing. And then if I do the thought process like is this going to be worth $1,500 one day? Like, is someone going to buy Too Big to Fail from Fail, or are they going to buy an Afterburn for $1,500 from X Copy, who potentially has way more upside as an artist? They're going to buy X Copy. So that's just that cold, hard, objective truth to the situation. My Lotus Train, I'm asking 50K. And I don't have the deja vu to sell. I'm not trying to sell these things anytime soon. If you look at how a lot of people made transformational wealth on NFTs, it's holding greater than 1 year. So I've already pulled my principal out. I'm going to sell one Lotus Train so that I can pull out significant profit, or I can reinvest that significant profit. But then I'm holding the rest of my two pieces that I own personally and holding at least half of where I get 50% profits of, holding at least half of that for over a year horizon. Because if I'm going to bet on someone being relevant and being big and being rare and desirable 3 years from now, I think Mad Dog Jones fits pretty well into that ecosystem. I paper handed some afterburns. I bought like 5 afterburns at like $1,200. I really liked the secondary volume. I really liked the collectors that were holding it, and I really liked the artist. So I bought a bunch at like 1,200. I sold one at 2,100, and I sold a bunch in like the 16 to 1,700 range. When it was just looking catastrophic on Nifty Gateway last week, and I was just trying to get that principal out. But now I'm starting to buy more of these. I really like Afterburn under 5K. I just objectively think it's like at 1,500 right now. I do think it's like a piece that could go up to 3K potentially. And if you look at Guzzlers too, Guzzlers are like down at 4,000, just like 4,100. And Guzzlers are super interesting because if you look, there's only 32 available to sell. So, you know, you get a couple buys in, and I mean, this thing's already up to 5K. And it has a much lower mint count, so it's way more rare. But I mean, both of these are bets on X copy, like continuing to push the envelope. But you know, value-wise, I do think that these are pretty good bets under 5K, and they hold up to those like comparison tests that I like to do. And then I personally just really like these Salvatores. Obviously, I've bought a lot, so you know, take that with your grain of salt. There's a ton of people holding multiple of them. There's I think it's just, it has Ethereum in it, it has weed in it, it has really cool design. People seem to really be liking the clearance drop overall too. And the biggest thing that makes me like these, and I mean, look, I'm already under the water $100 on each of these, so you know, $500 loss, but I'm not worried about it. I'm going to hold it for a while because another thing too is how does it fit into the ecosystem? Do I think this is ever going to go for $3,000? No, but could this go for $1,000 in the next bull market? You know, yeah, potentially. So for me buying at $400, like I think this could go up to $1,000. It seems like the kind of piece that, you know, a lot of people are just going to want like at least one of in their collection. It's affordable, it's cool, it has a lot going for it. But open to being dead wrong on this one. I think probably the number one value, and you know, it's probably going to get bought up. I have a global out there. I don't think it's going to hit. I was trying to catch a paper hander. But I really do like the current price action on Ferocious. You know, I think the floor right now is high 2K. Oh, dropping even more, 2.7. I personally think like Ferocious, you know, his art got kind of dinked when he did a bunch of collabs, but we haven't heard from him in a while. I think he's gonna be in the lab grinding very hard and is gonna do some big things. And I think that the words probably got back to him to like not continuing to dilute his brand and pump out too much work. But you know, at 7K, like even if you can get this like 2.5K, I just think like long term it could be great value. He's one of those like real early crypto artists. A lot of whales are really bullish on him. And I think the art piece is just in like today's day and age like very iconic. I'm not going to pretend here that I'm like some sort of like, you know, art critic, but I think this art piece like speaks a lot to the battle in Ferocious, between his gender identity, or their, however I'm trying to be politically correct, their gender identity crisis. Um, but you can see like there's like band-aids on the hand, so like Victor is trying to like silence Victoria, but like Victoria is like probably biting at the hand and is crying, and you can see heart, like there's a heart broken down there. It says like a shame, you could have been a star. I mean, there's just a lot to the art piece that I think it could be considered iconic in the future or down the road. But either way, I like Ferocious a lot. I think that this is a great pullback in price. I think this went up to like 6 or 7K at one point. And then how is this guy doing? Yeah, so I mean, this is held up really well. 12K, and then the next jump up is 14K. So if anything, that makes me even more bullish on Victor and Victoria in terms of the price. So you can't call me a shill if I'm pumping something that I own nothing of. Even though I said I like X copy, and I definitely own that. But yeah, I think Victor and Victoria is probably a great value right now. And yeah, that sums up this video. I hope that you guys find some value in it. I know it's pretty long, but I think that there's just a lot of confusion in the market right now, and a lot of fear, uncertainty, and doubt. And I also think that a lot of people have been executing on an old, outdated playbook. I have personally myself, and it probably cost me 20 grand over the past 2 weeks in losses. So that's what's caused me to like really reevaluate how to look at the ecosystem, how to value work, how to compare it to other pieces. Like trying to be objectively cold-hearted truth about like how does a new drop fit into the existing ecosystem? How do some old drops fit into the existing ecosystem? And if they don't fit, you got to make tough decisions. But in summary, I think that we're pretty close to the bottom on Nifty Gateway. Crypto is doing some great things this past week. I think if the bull market melts up on crypto, if we have a really good next 2 weeks, there's going to be a lot of new wealth generated. And once crypto starts to stagnate or fade, those profiteers are going to look for other areas to make money. And I think NFTs is not going away. It's a massive space. It's going to continue to evolve. There's going to be inflows, there's going to be outflows. We're dealing with a big outflow right now, but I do think that the inflows will come back. So, and that's my personal opinion. This is not investment advice. Do your own research, do your own advice. Don't rack up 30 grand on a credit card. I did this with cash in the bank. I invested cash in the bank, no credit, and got my investment out. So I'm able to operate at a different game than a lot of people. And that's not a humble brag or anything like that. I grinded really hard for years to get money in the bank account so that I could, make investments like this and not make it on a 30-day timeline or super risky. So just be smart out there. Don't be blowing your, tens of thousands of dollars into this thing if you can't afford to. But if you have capital and you have the ability to speculate on things, I still think that there's opportunity in Nifty Gateway. You want to buy when it hurts. You want to buy when there's a pullback. There's a huge pullback on the stock market over the past couple of weeks. If you bought 7 to 10 days ago, you're sitting really good right now. If you bought at the top in December and you sold 7 to 10 days ago, you probably shouldn't be investing. So just some things to consider. But one summary too, you're not bad at Nifty Gateway if you lost money over the last 2 weeks. I think some people may think that about themselves. If I came to Nifty Gateway as a newcomer 2 weeks ago, I'd probably be quitting right now, because it must have been so hard to make any money over the last 2 weeks. You had executed like just a absolutely perfect strategy and gotten incredibly lucky just to buy things that happened to go up because such few things actually went up in value. Like if you made money and you're new from the past 2 weeks, like pat yourself on the back. And if you lost money and you're new over the past 2 weeks, like don't worry about it. Literally 90% of people lost money over the last 2 weeks. So like don't get too frustrated, but like look for the opportunities now. Like refocus your strategy. And I hope some of like the tips and tricks and insights here were useful. And I'm pretty active in the Discord. Feel free to reach out to me if you have questions or if you need advice or help. I'm definitely wrong all the time. People have publicly shamed me for some of my losses. I publicly shame myself for some of my losses. That's the name of this game. You got to be willing to take pretty bad losses and also hit some really big wins and hope that the latter offsets the former. But anyways, cheers everybody. This was fun, and keep an eye out for my next video.